Okay, so here I'm going to go over a Disney call that I made last week from the third to the seventh. It was over a long weekend. I actually got into the position at near close on Friday. I want to say around 10 o'clock. Um, Sold a good chunk of the position before close because we got a nice move up. No, I didn't sell any before the close. I'm sorry. I sold on Tuesday at the open when we opened from the long weekend. And then I scaled out throughout the rest of the day. And I will show you guys what that looked like, why I took the trade and whatnot. So here's kind of the view that I had on Disney. Let's go ahead and find the third. So here's the third, starting right here. I'm actually going to go ahead and turn on the extended hours for you guys so that we can see what it is that we're talking about. Yeah. So this setup, let me start actually on the daily chart. I feel like that'll be better because that's where the trade idea originated from. So I actually had Disney in a downward channel, right? In a downward trend, breaking out um on the daily chart from, I think it was right here. Yeah, it's literally perfect. And we have this downward channel. We have a false breakout here on the 13th of August. We get a nice dip right back to our support, which can be found right here, right? That's a nice little wedge formation. You see the price action tightening up. You want to see all those things before you get into a long, right? And so we break out and we have some levels here. This is not a gap. I know I draw my gaps like this, but this is not a gap. These are just some levels that I was trading, and I colored them this way, um, like a dummy. We have 181 right here, which is a support level. And on Friday, we actually got this breakout throughout the week. We found some resistance here at the 184 level, and then we come back and test 181. So on Friday, I remember I think it was either Mo or Stock Snipe. I can't exactly remember, but I was actually asking them. One of them was talking about Disney, and I had asked them for some support levels, and they actually had whoever it was mentioned to me that below 180, that 179, 179.5 range represented support. And I didn't have it drawn myself, but I just kept that number in mind throughout the day. I asked them early on in the day because I was thinking about taking the calls here. And whoever I asked said, no, wait for that 179.5. That I think that's support. And so I kind of forgot about it. During the mid end of the day, I took the trade about right here, actually, on this 8 EMA test. Um, they had, that just popped back into my mind as I was cycling through my stocks, looking for something to swing. Um, and I remember the Disney, I saw it, right at the 179.5 area where we had mentioned, really put me on alert. I like this curl up from the low of the day. I like that. And then after we got this test, I'm pretty sure it was like right around here where I got in. And then I actually forgot about it. I got off early that day and it wound up closing much higher than I had anticipated. I was expecting, pretty much flat or even negative trading into the weekend, but I did expect a bounce to come the following week. So that's why I took the trade. Um, One thing, I guess the first thing I'll mention is that, if you're in the Discord, we really do most of our trading in the first hour and a half and the last, couple of hours, right? So that 9:30 to 11, that open to 11 range, there's a lot of volume, things are getting shuffled around. We try and take advantage of that volatility. And then towards the end of the day, similar thing, the volume's coming in, people are making their moves for the following day. And we try and take advantage of that volatility as well for day trades and sometimes for swing trades. During this middle time frame from 11 to like 2, that's really when you should be looking at your daily candles and trying to, you do your charting the night before, and then you see during the middle of the day, whatever your thoughts you had in your mind about the charts, what does that look like? Now that we've had the open, we've had a couple hours of trading. Do your ideas still hold your theses that you had thought of the night before? And that's really where you're going to be, you know, um, that's where the swing ideas will come from, that middle hour, that middle couple of hours when the market is pretty slow. So use that time to your advantage. to go back, look over your charts, and try and find some potential swings. So specifically, we can go over here. I got into the Disney 185 calls for the following week. Um, this was on Friday. So it was about right here. I had gotten in at 28. So it was during this time frame right here, on our bottom left. And then, as I said, the calls actually went up a decent amount, like well over 50% before the close, and I wasn't even paying attention. I was out doing something else. I had my stop loss set, but I didn't see this. I probably would have taken some off the table. The next day at the open, I actually sold some at point four. I sold half the position at point four, and then I decided to let the rest ride. One of the things that I see a lot of questions on in the Discord is, when do you guys make your decisions to hold a position for a little bit longer, maybe a couple hours, as opposed to cutting it, particularly when you're up? When do you take profits, right? And so one way that I think about that is, if I got into my position at 28 and I sold half at 40, I just secured 12 cents, $12 a contract on my position. So that's locked in, right? So that's now my buffer. Anything after that, all the way down to my entry, is free, because the play could go all the way back to my entry, and I haven't lost a dollar, not of my profits or of the initial capital. And realistically, if you want to take it a step further, the position could technically go, I sold it up $12. If I could sell it down $12 at 16 cents a contract, and I would break even on the total trade, minus commissions. So that's kind of how I think about it. You have to, like, I made some profits, and so even if I say I have my stop loss at 20, right, and the contracts came all the way back down to 20 and my stop loss gets hit, I still profit on the trade. 20 minus, what is that, 12? No, 20 is 8. 8 minus 12 is 4. 4 on the first half of the contracts. I think I had 10. So I was able to get $4 on 5 contracts, $20. Um, not the profit that I would have had, obviously, but at the same time, it's still a green trade. So, like, that's kind of how I think about it. I try and lock in profits early so that it gives me just more optionality with the rest of the play. I could either set my stop loss at my entry, or I could let it actually ride to break even. And in this case, it works. You see that we get a nice reversal here. So that would be Monday right here on the top left. We had a nice little morning flush here. It comes back down and retests this opening range. And then from there, it just ripped the rest of the day. And I actually believe I wound up selling some right here on this pop, because I just had some. I think some news came out or something like that. I sold on this pop, kind of paper handed it. We come back down, and then we keep going higher, just constant buying throughout the rest of the day. So that trade got me about 283%, I believe, at my highest exit. And like I said, it still had some more room to go. When you're looking for your swings, you want to try and get, Zach Morris loves to say, like, buy stuff when they're ugly as opposed to when the chart looks nice. This particular candle here, before the close, you got to think, when I bought this stock, this was a pretty red candle. This wasn't really a hammer candle like we see here. When I bought the stock, when I bought the options, we were at 179. So it was a pretty thick red candle. And we wound up closing up much higher. That's when you're going to get those premiums the cheapest, particularly when you're swinging. You don't want to buy, when we're testing, especially for swings, when we're testing resistance on expecting a breakout, right? Because even if you, like, let's say I had bought the calls here on 9-1, we're testing this resistance, and we do wind up, eventually breaking it, but not until 4 days later. And we know with options contracts, the nearer dated that they are, you're going to lose some premium as time goes on. A pretty significant amount. So we can actually check that. If I had bought them on 9-1, let's just say at the close on 9-1, I would have paid 148, right? And then on this move higher, yeah, I would have still been in the green, but you got to think your max drawdown was the contracts were at, 25 at one point from that 1.4 that you had that you would have bought at if you bought at the close. So your position would have been down 80%, and most of you would have sold. So yeah, you do get back in the green eventually, but that drawdown, I personally want to avoid that, and I know a lot of you guys do too. So when you're taking your swings, just really look to buy at support, buy on ugly days because that's when your premiums are going to be in your favor. Um, and yeah, that's pretty much it for that one.